Okay, so once again, thank you everyone to join our webinar here at ew-forecast.com. We will walk you through different markets today. In the first part, I will particularly focus on the euro-dollar long-term direction. So actually, I will look at some long-term cycles for the euro-dollar and will confirm this view from other charts, especially Euro-Aussie, Euro-Boer, and gold. Okay, as you know, the markets have a very strong correlations, especially on the long-term perspective. So definitely, you will not be looking for a very strong US dollar if at the same time you will be looking for a bullish metals. Okay, so this always need to be considered when you're looking or analyzing the markets. When it comes to trading, it's a little bit different. But firstly, now we will take a look on the weekly chart. And then at the end, we will take a look on midterm cycles where I think that euro dollar is still headed before those long-term levels could come into play. Okay, so firstly, let's take a look on the euro dollar weekly. Now this is the pattern from 2000 lows. I have shown this chart several times over the last few years. I was looking for a 5-wave move to the upside and a 3-wave retracement to the downside. And what is really exciting about this pattern is that in the middle of this decline from 2008 highs, we had a very tight contracting range. Okay, it's called a triangle. So when you have a triangle in the middle, you know that whole move should be corrective because triangles cannot occur in a wave 2 position. Okay, so I'm pretty confident that this is wave B and that we are now moving to the downside in wave C. Now wave C or wave A are usually very similar, so especially in distance. So we are approaching here with wave C towards equality level compared to wave A, measured from an end of a wave E. Then we have also 161.8% extension of this red wave A. Then at the same time, we have a very important figure here, parity. Okay, now I think that this parity could be tested in coming weeks, coming months, and then potentially we will see a reversal to the upside. So actually, my point is here on the weekly chart, that sooner or later we will see a reversal higher on euro dollar because we have 5 waves up and 3 waves down at important fib levels. Okay. Now this could come in play in the second part of 2015 if other markets will follow, or maybe we will see a delay. Maybe in 2016, 2017, we will see a reversal to the upside. So this is euro dollar weekly. The wave count is suggesting that we will see a reversal to the upside. Okay, and now I will also look at the Euro-Aussie. This is the cross pair. As you know, over the last few months, a lot of euro crosses were tightly correlated to euro dollar. Okay, so if I'm expecting some strong change in trend on the euro dollar, then obviously something should change also on other euro crosses. So actually, I could look on different euro crosses, but I will look only on the euro Aussie because of very clear pattern. Okay, so before we go to the euro Aussie wave count, now this the daily chart, the overlay chart. You can see that both markets are actually falling since December. Okay, when this tight correlation come in play. So actually, if I'm predicting a reversal on one market, on euro dollar, then obviously I'm looking for something similar on euro Aussie. Okay, because correlation for now is in play. So I will take a look on the long-term euro Aussie now. So euro Aussie here, what is really important on this weekly chart is this 5-wave recovery from 2012 lows. Okay, not only that we have 5 waves up, we have a very clean 5 waves up with a strong third wave in the middle, which is usually the case, as you know. And more importantly, we see a reversal to the downside from this 5th wave in 3 waves for now. We are already at new swing low here, so I think that we are already in wave C, And in fact, this wave C can be forming some very interesting pattern. It can be an ending diagonal, okay? So here on EURUSD daily chart, I'm looking for a wave C that can be an ending diagonal. We have seen here a new low. So maybe some would say that wave 5 is done here, but if we will take a look a little bit closer on intraday levels, intraday price action, then you will actually see that this is a corrective movement and that I'm looking for another leg down. Ending diagonals are very, very strong patterns, okay? Because once they are finished, the market just can explode on the other side, okay? So it's very, very important to track, to get in track with the ending diagonal at the right time, okay? So actually, with the EURUSD suggesting to me that we will see a little bit lower levels and then a reversal, a sharp reversal to the upside. Okay, I will be looking for the EURUSD to bounce from around, ideally from around 61.8%, whereas also wave C will equal to wave A. Here around this level, we obviously have also this parallel channel support line that I would love to see it hold. Okay, so a bounce to the upside on EURUSD should also then support the euro dollar view, okay, which means a reversal to the upside. But we are not done yet, okay, on this euro weakness. That what will come into play in the second part of this webinar. So now we said we have bullish view, long-term view on EURUSD and euro dollar. We have also bullish, or I should say bearish view on Euribor, okay. So what I will do is I will actually delete now EURUSD here, and I will put the overlay chart with 3-month Euribor, okay. So just a second. So what we see here is that, let me put this unit together. Okay, so what we can see here that actually euro dollar have been in an upward correction through 2013 and till mid of 2014. Okay, and when the euro dollar moved to the downside, Euribor moved sharply to the upside. Okay, and now the question is, where or what is the wave count for the Euribor? If we are expecting a bullish reversal here on the upside on euro dollar, then Euribor should sooner or later move to the downside. Okay, because as you can clearly see, correlation is negative. Okay, so I will take a look here now on a weekly chart first. On the Euribor, you will see an extremely clear pattern. Okay, from 2011 lows, we have waves 1, wave 2 pullback, nice extended wave 3, then we got the wave 4, so we should be now in a wave 5. What is very strong indication here about this pattern that we'll see a reversal down is this triangle. Triangles occur always prior to the final move within a larger trend. So this should be a final move. This must be a fifth wave. So if you are in a fifth wave, then a reversal to the downside should follow, which will support the euro dollar. Okay, so I would definitely not be leveling this Euribor any differently. Even if I wouldn't have euro dollar wave count, I would make this leveling as it is right now on Euribor. So to me, it shows me only one direction, that euro will turn to the upside sooner or later. But as I said, it can be in the second part of 2015, it can be 2 years later, because these are long-term cycles, okay? So it takes a lot of time for tops and to reversals or lows or whatever, okay? So here we see price in fifth wave. Now I will also take a look on this substructure of fifth wave here. I'm looking for a 5-wave movement. This is my wave 1, wave 2, an extended wave 3, wave 4, and now I can already see some choppy price action here with lower volume, like in the past bullish waves or bullish swings. So I suspect that we are already in fifth wave of a fifth wave that can be even an ending diagonal. Okay. But for now, it's still incomplete. As long as we are above former swing lows, the trend remains up. Okay, but if we'll see a break, let's say of this red wave 2 that I labeled it, then this would be a very, very strong indication that euro bears are done. Okay, and that euro dollar will turn to the upside, because this would then mean that fifth wave has stopped here. But for now, I still see a little bit more room for more upside. We could be now in a minor wave 4 correction, and then be aware of a fifth wave up. Okay, so this tells me that euro Aussie should then also, if the euro will reverse strongly to the upside based on this Euribor bearish reversal view, then obviously I would be also expecting bounce on euro Aussie. But bounce on the euro Aussie could not be so strong than on euro dollar, especially if dollar will turn lower in general against the Aussie as well. Okay, so I hope this makes sense. Now I will also take a look on gold. Okay, I have also some very interesting pattern on gold that we are tracking. Actually, this is my first wave count for primary wave count for gold. I'm tracking at a 3 wave fall here. I know that this wave count is not a textbook example, but still is valid. Okay, I'm looking for an extended wave C with a sub wave 5 of wave C in progress. Okay, so what caught my eye here was this wedge pattern that I'm still tracking it. It's again an ending diagonal. I can see lower volume here, which means that bearish momentum is decreasing. So I suspect that sooner or later gold will turn to the upside. I also have here a second wave count. Maybe you will love this one a little bit more. It actually shows that we are in a 5-wave decline of wave A, then we will see a reversal up for a wave B. Okay, but again, still, then you have an ending diagonal at the end of this move. So you would be again expecting a reversal to the upside. So this tells me that once this ending diagonal will complete at new low, dollar will fall and euro would be expected to turn bullish. Okay, so this is another market that suggests, and more even more important, another pattern that suggests that sooner or later dollar will turn on the other side. Okay, and I suspect that this could happen in the second part of 2015 based on timing, based on the patterns that we are tracking. But for now, this ending diagonal is still not complete. I haven't seen new low just yet, which means that dollar gains are maybe not done yet, or euro weakness. Okay, so now I will go back to the euro dollar and focus now on the midterm cycles. As I said, long term, I think that euro dollar could turn to the upside, but on the midterm, we are not there yet. Okay, I'm looking for parity to be tested, but more importantly, I'm tracking this very complex pattern since mid-March. And actually, if you can take a look at this price action a little bit closer, you will actually see that you have from March lows, which is here, okay, you have seen a 3-wave move to the upside. Then you have seen a 3-wave move to the downside, but not into a new low. Okay, so actually we have free pattern. Okay, now always when you want to confirm a low in place, you need 5-wave bounce from the lows. Now this first leg was clearly not been made in 5 waves. Okay, it was made in 3 waves. So either you will label this as a one completed corrective cycle, okay, and that you would expect the next impulsive reaction to the downside, or either this is maybe part of a complex correction that is still unfolding. And since we have seen a quite deep pullback here, and because the price action is still very slow in time ranges here, I suspect that we are in a complex pattern. Now there are only 2 patterns that could be in place here. It can either be a flat or it can be a triangle. Okay, so here, what is a flat? Actually it's a 3-3-5 pattern. Okay, this was a free wave move up for a wave A. Then we got a free wave move down for a wave B, and then you would expect a wave C. So actually, with these blue lines, I'm showing you what the euro dollar already has done. Okay, so either we are now here for a wave C moving to new swing high, which means above wave A, which is usually a very tricky for traders, especially those who don't recognize the pattern at the right time. It will suggest that market will reverse to the downside if you see a fade breakout. Okay, to new highs. Just a second, traders. Okay, so here on the right we have a second pattern that it's possible here to be forming on euro dollar. It can be a triangle. Now this is my primary leveling. I will show you why. So actually here I'm also looking for a three waves up for a wave A, like we have seen here, these three waves up. Then we got the three waves down for a wave B, this wave B, and now this could be in play. We are now probably in wave, so we are now in a wave C of a corrective advance or wave C of an impulsive advance, because here you would expect that wave C will unfold in a flat by 5 subwaves, while here wave C should make a corrective movement. Okay, so why I think that this is a triangle is because later I will take a look on this substructure. You will see that actually this movement is not impulsive, it's very slow, very choppy, it looks corrective, so it definitely doesn't look impulsive. That's why I think that we are in a triangle, because as I said, each leg in a triangle should have corrective characteristics. Okay, so more importantly, either we are in a flat or a triangle. I see euro dollar that will move to a new low before market will turn to the upside. Okay, so here is actually this my count for euro dollar daily. I'm looking at extended wave 1, wave 2, then we got 5 waves down for a wave 3, and now we could be in a wave 4 triangle. Okay, so I'll be looking for a break to a new low maybe in May if we are in triangle, maybe in June. Okay, and then maybe bottom will form sometime this summer or maybe in September. So that's euro dollar daily chart. Now I will take a look on the 4-hour chart. Actually, here I'm looking at a triangle, as I said, 3 waves up for a wave A, wave B, and now you can see that this rally is very slow, very choppy. I also have hourly count here. Let me take a look. Hourly count here. Okay. So what I see here is that rally from April lows, you can see that it's very overlapping. Okay, each leg, each pullback made an overlap with the previous swing. Okay, so you cannot count this as an impulsive leg. Okay, you have overlap here, here, then you got an overlap. Come on. Here, and then again here at this wave 3. So actually I shared this bearish view with my members last week. I highlighted a potential ending diagonal here for wave C and a reversal to the downside, and looks like that reversal to the downside unfolded in ending as a leading diagonal. Okay, just let me delete this these lines here. Okay, so actually we recognized this 5-wave decline as a leading diagonal yesterday. I also said that bounce could occur in 3 waves, and highlighted today, a few hours back, that we could see a reversal down from 1.08 level. Okay, and this occurred almost on pip. And what I see here is that we are going most likely lower into wave C of this wave D. Okay, so I suspect that we are in a triangle, as I said, and not in a flat, because as I said, this leg is looking to be corrective and not showing impulsive qualities. Okay, so euro dollar long term, I will be waiting for a reversal but for the midterm cycles, I still see euro dollar going to new lows. Okay. Now let's take a look also on cable. Now this could be very interesting. Can someone confirm that you can hear my voice, please? Someone just mentioned in the chat that you cannot hear me, so okay, everything is fine. Okay, perfect. So actually on cable, I'm looking at the bearish wave count. We were looking for this ABC rally up in a wave B on a weekly last year, and called our significant reversal to the downside, which is now full in play. So obviously we will continue to look lower. I updated the wave count this weekend. What I'm looking here is an incomplete 5-wave decline. We are below this upper channel resistance line. So this rally from the low still can be corrective. I'm looking and will be expecting a reversal down from the upper side of this channel, because on the 4-hour I'm tracking actually a flat correction. Okay, I'm looking for a wave A. Then we level this down as a 3-wave decline for a wave B to a new low, and this could be now our 5-wave rise to new leg up, which I think it's a wave C final leg within this flat correction. So ideally we will see a reversal to the downside. We are now at the reversal zone, but as you know, in expanded flats, wave C could spike above wave A high and then turn to the downside. Okay, so I think that we are in an very interesting range for a potential reversal to the downside. Now, there's also possible to count this cable from a different perspective. Okay, I can label this real quick, so just a second. Okay, so actually, why it's important to track some different counts is because of trading. Okay, so when it comes to trading, it's a little bit different. To traders don't care in which direction market will go. They will just look for a trading opportunity. Okay, if you're analyzing the markets, then obviously you will be more detailed and will put all in one context. Okay, so when it comes to trading, here is what I would be tracking. It's actually possible to label this whole movement, okay, from mid-March to start of April. You could label this as a wave 4, okay, and then you got a 5-wave decline down for this wave 5. Okay, so actually that's why I have here on this chart labeled alternate scenario as a 5th wave bottom here. Okay, so this is now the count. So actually what is very interesting here from a trading perspective is that no matter which wave count you are tracking, you would be now expecting a minimum 3-wave reversal to the downside. Okay, so either you will see a fall into wave A, B, and C. So you would be expecting something like this. Okay. And you would be looking for wave C to move at least back to the area of a former wave 4. Okay, so if you are a short-term trader, then you will wait maybe on this impulsive wave A down and look for potential short opportunities in wave B. Okay, but only if this first leg, wave A, okay, will unfold in 5 waves. So if you see a 5-wave drop from these current highs or from a little bit higher levels, then I think that opportunity could be in the next bounce, which could be corrective wave B. Okay, and maybe then after 3-wave up, who knows, maybe cable will turn to the upside. On this wave count, you would be also expecting a reversal down now in first leg. Okay, so actually what you'll be looking at is again to consider shorts in a pullback, but in that case could be a wave 2. So no matter which wave count you are tracking, you should get this third leg of decline. So either this third leg will be impulsive and an extended, or either will be just slow move as a wave C. But in either case, this could be opportunity for shorts in a wave 2 or a wave B once we will get a 5-wave decline from the high. So I'm tracking this one very closely for potential shorts, but I would love to see a reversal down from this new swing high, because I'm pretty sure that there are a lot of stop orders on short positions that are placed above these highs. So maybe those would be taken out, and guess what will happen then? Market will turn in the opposite direction. And another reason why market could turn down from these important swings, this spike high, is also because there are a lot of orders of long positions above these levels. Okay, so actually if the market will turn down from above this swing, then actually short positions that have stops there would be taken out, and new longs would be again on the wrong side, because the market will fill their order and then turn to the downside. So actually what would I love to see is a spike to a new swing high and a reversal down in 5 waves. Okay, then I would be looking the set for a short in wave 2 or either wave B. That's not important from a trading perspective. You know what you are looking for, at least short term. Okay, so you would need to focus on your minimum expectations, and in that case would be just third leg to the downside. Okay,